It's time to invest some money. You put some hard-worked money aside, or maybe you've finally gotten that raise you expected. Whatever the case, it's time to invest your money and let them work for you. Let's open an investing account. How do we do that? Well, if you don't want to invest through a retirement account because you don't want to be subject to their strict withdrawal conditions, or maybe because you don't easily have access to one, for example, if you're working abroad, then probably your best solution is to open a brokerage account. A brokerage account is an investing account that you can use to buy assets in the free market. It can be stocks, bonds, ETFs, but also commodities and material or pieces of real estate across different exchangers around the world. The number of brokerage accounts belonging to investors like us, they call us retail investors, as opposite to big corporations and investing firms, have increased exponentially, especially during the COVID-19 pandemic. According to a study conducted by Schwab investing firm, over about 500,000 of their clients, 15% of their current retail investors began investing in 2020 during the COVID pandemic. Schwab currently hosts 31.5 million retail investors in the USA and $6.9 trillion in assets, just to give you an idea. That means that 7 million people have started investing after 2020 only through Schwab in the USA. This is as many people as half of the Swedish population. Worldwide, this number is several folds higher. This is a clear sign that people around the world are aiming to become financially independent. If you're here, it's because you also have the same goal, so let's start. Before getting you a brokerage account, we need to first understand a simple but fundamental concept that you may not be familiar with: tax-advantaged accounts. A tax-advantaged account is an account that offers you some kind of tax discount and benefits on the money you invested on it. Let's point out straight away, brokerage accounts do not belong to this family. The typical tax advantages you can seek on an investing account are of two types. 1. Accounts that let you deposit money that has not been yet taxed by the government, also called pre-tax money. In a nutshell, when you contribute to these types of accounts, you will be able to lower your taxable income and pay less tax. 2. Accounts that let you withdraw your money tax-free. So in this case, your initial deposit is post-tax money, meaning money already taxed by your government. But when you cash out your funds, you pay no tax on it. The most common type of tax-advantaged accounts are retirement fund and pension funds that governments offer you. The bad news is that neither of the two definitions above applies to a brokerage account for which you will deposit post-tax money, and at the time of withdrawal, you'll also have to pay tax on the amount cashed out. So, why on earth would you choose to open a brokerage account over a retirement or pension fund? Well, a few reasons. A, it's easy, especially for those of you living abroad and having a tough time participating in local retirement pension funds. B, a brokerage account gives access to a limitless choice of asset across many international markets, providing you with geographical diversification. C, there are no time or amount restrictions when it comes to withdrawing your funds, as long as you pay your tax on it. D, there is no limitation on the amount of money you can contribute to invest. Let's start from a simple question. What makes a brokerage account a good brokerage account? We picked 4 main key features. 1, accessibility. 2, safety. 3, fees. 4, features. Accessibility is the first point we want to discuss because the best brokerage account is useless if you cannot open an account. Some great platforms like Vanguard or Fidelity are not available to non-US citizens, while others such as Charlie Schwab platform have special international accounts, which come with few disadvantages in terms of fees. In a nutshell, if you don't live in the US, your options can shrink quite a lot. Safety is the second key feature to consider while choosing your investing platform. Almost all the major platforms have 3 levels of safety. A, independent managed account. Basically, your funds are kept in a fully regulated and safeguarded bank, usually in the US, UK, the EU, or Singapore and Hong Kong, depending on your country of residence. These bank accounts are fully independent and separated from the broker itself. In this way, the broker is not allowed to reinvest your funds, unlike a bank would do. B. Compliance with finance regulatory agencies. Depending on your location, the broker is regulated by secured financial institutions all around the world, such as FCA in the UK, FDIC, SIPC, and SEC in the US. These regulatory bodies provide the guidelines as well as actual coverage, up to a certain extent, for your funds in case of troubles. When a brokerage joins one of these regulatory institutions, it is obliged to comply with their rules. For example, a brokerage operating under the SEC rules will need to make sure that if things go south and they go bankrupt, they will protect their clients up to 250,000 USD per each account. Not too bad. C. Private insurance company. This is an additional layer of protection, consisting of a private insurance company providing extra coverage for your money. The fees is another aspect to consider, because once your money is safe, let's make sure to make the most out of it. This fee you will end up paying will mostly depend on the use you'll make of your investing platform. The more trades you execute, the higher your fees will be. That said, some platforms are just cheaper than others. Most common fee you want to look at are deposit fees, withdrawal fee, and transaction fees. Last but not least, the features. The ones I usually pay attention to are recurring investing, joint accounts, and in general, the ease of use of the website or the mobile app. Recurring investing for me is a must. In a nutshell, means that you can transfer a certain amount of money and set your investment plan by deciding what, when, and how much to buy on a regular basis, for example, weekly or monthly, and forget about it. You just need to keep an eye on your funds to make sure your account won't get dry. Joint accounts are the next one. If you invest for your family or as a couple, you want to make sure that both you and your life partner have access to your account. This is valid for many reasons, but especially in case of unfortunate events. Touch wood, but bad things happen, guys. Finally, how easy it is to use the platform. The finance world and finance people are not the most user-friendly, we know, so sometimes the website or mobile apps can be hard to use and navigate. So let's cut the chase. Which one is best? And these are the three you should try. The best overall for me is Interactive Brokers. Interactive Brokers comes with the lowest fees among the competitors at the time of this video. They provide one of the best lists of available countries from which you can open an account. Lastly, and more importantly, it ticks all the boxes for what concerns your fund's safety, which also includes a private insurance policy with Lloyd's London that brings the maximum coverage for your fund to 500,000 USD, which is quite impressive. They let you set up a recurring investment plan for yourself, and you can open an individual or a joint account even under the same owner. Icing on the cake, Interactive Brokers has solid investor education programs available online to the public. The only little drawback of Interactive Brokers is the user interface, which is definitely not the friendliest one. The second best is TD Ameritrade. This online investing platform arrives second because it has slightly higher fees and does not offer the same level of international markets exposure as Interactive Brokers does. That said, it is as secure and allows as many countries to register an account. It comes with the same features mentioned for Interactive Brokers and probably a slightly better mobile app. Finally, the new guy in town, Stash. Stash offers you a quite unique setup. Opening an account with Stash, you'll get at the same time an investing account and a bank account, and even a debit card if you need it. The mobile application is the most user-friendly I've seen so far, and it brings the recurring investing feature a step further by providing an automatic investment advisor that basically creates your personalized asset portfolio according to your risk profile and your growth target. As for the previous two options, Stash also offers 500,000 USD coverage on your funds through FDIC insured bank accounts. The fees are the sore point of this broker, which offers a monthly subscription plan starting from $3 per month. This might look small, but it is probably the same total fees you'd pay on Interactive Brokers over the whole year. So keep in mind that whichever platform you choose, investing should be taken seriously. The first step is to understand where you stand with your financial situation, and the best way is to get yourself a budget. Check this video on personal budgeting.